So this document that I have pulled up next to my head here is something that I've shared with all of our VIP members. This is the exit thought process. But again, before we go into this, let me explain to you how we measure risk. So we have 3 entry systems that we use on a daily basis. These are the things that are tested, proven, and have been working for us over the last months and years, different lengths for different strategies. But these 3 systems are called the A1, the D1, and the D2. We label them because it makes it easy to identify them. If you create language around something, it can become habitual for you when you're trading. So by creating the language of the A1 entry, the D1 entry, and the D2 entry, I'm then able to determine probabilities within those entries. For example, what's the EMAs telling me? How much space is left on ADR? Some of you guys have probably heard me talk about this stuff before. So once I can grade the probabilities, once I know what entry signal I'm looking at, then I can determine how much risk is going to go on it. So are all the probabilities in my favor? Could anything be better about this trade? No? Okay, that's an A setup. Or maybe some of the things could be better about it. Maybe there's not a lot of space on ADR, but everything else is great and you still want to take that risk-reward setup. Maybe that's a B setup. So in our courses, I teach everybody how to grade the probabilities, right? And that'll determine if it's an A setup, a B setup, or a C setup. So now, I don't want to lose you. I hope you're following me. The way you should be reading the risk, and this is before we talk about the exits, but the way you should be reading the risk is first, dependent on the entry signal. Are you trading an A1, a D1, or a D2? And if you're not trading with us, you should have, language to your signal. Know that signal. Then, step 2 would be to take it deeper and read the probabilities within that signal. Is it an A setup? Is it a B setup? Or is it a C setup? You don't need to do A plus, B plus, B minus, none of that stuff. Keep it simple, A, B, or C. And then, once you know your entry signal, your grade for the setup, you can then have preset rules for that setup as far as how much risk, how much size you should be putting into that trade. But I'm hoping at this point in the video, you understand that before we can talk about the exits, you first have to know the entry signal you're trading, the grade of that setup, and then on top of that, which goes right next to that, how much size is going into that setup. Know the probabilities that go into that setup to give it the appropriate size. Once you're in the trade and you have the right size on, then we move from risk management into trade management, like I said at the beginning of the video. So now let me explain to you and show you here how I manage some of these trades following the same exit rules every single day. And it's all determined upon the entry signal and the letter grade that I gave that setup. So before we get over to the markups, take a look here at this exit sheet. And you can honestly screenshot this, write this down, do whatever, modify it to your system if you want to. The A setups for me, those really solid entries where all the probabilities are in my favor, I'm going to close 25 to 50% of that trade when I'm up about 2R, 2 to 1. So if I risk 5, as soon as I'm up 10 or 11 pips, I'm taking half of that trade at least right there. Then what I'm going to do is let that trade continue to run by locking my stop loss in profit so I can't lose any money. And I'm going to wait for that trade either to hit a take profit level that I set based on support resistance, based on ADR, based on the other indicators we use, or I'm going to let it give me an exit signal and I'm going to close the rest of that at a 15-minute candle close when that exit signal presents. Now, the reason I say the 15-minute candle close is because a lot of people will close mid-candle, but sometimes what that does is it gets you caught in a wick that actually ends up moving back down in your favor and you still should have been in that trade. So it's really important to wait for the candle close on the 15-minute before you make these exit decisions based on these signals that I have at the bottom of the page here. So then for the B and C setups, you can probably put some logic into this and assume I'm going to close more of that trade sooner and lock the trade sooner because it's not as good of a setup as the A setup. And that's going to be the same thing for any entry signal, A1, D1, or D2. I'm always going to lock the trades that are less probable sooner. Put the stop loss in profit. Take me out if it's wrong. I'll find another good trade. I'll find a better trade later, tomorrow, whatever it is. That's the approach with this strategy. So for the B and C setups, 50% of the trade comes off at about 1R, 1.5R. So again, if you're risking 5, as soon as I'm up 5, 6, 7 pips, take some off, lock the stop loss, can't lose, blue trade. Good, do it again, find the next one. That's the one good trade mindset. That's the way I'm managing these trades. Now, at the bottom here, like I said, you can see the exit signals, and I'm going to talk about this when I show you these markups. These exit signals will present for you throughout the day in different variations. Sometimes it'll break the 21 before it maxes out ADR. Sometimes you'll get divergence to present against you. It's really important to use all of them together and weigh them together to make your best exit decision. But for me, the most important thing, if you take anything out of this video, should be that no matter what setup it is, no matter how great of a setup it is, it can still be a loser. So you have to follow these consistent rules no matter what. If it's a C setup and it still looks beautiful, but it's still a C, but it looks beautiful and it could run all day, doesn't matter. Lock the stop loss on that C setup or you're going to regret it. I've regretted it. That's why I'm sharing this with you guys. The reason you gave it a C grade is because it's not as probable. So what's the logic in staying in that trade longer than you need to? Get in, get out, get the bag, and move on to a better trade.